Hi and welcome. This is a review of the first week of the simulation for our course. Now, net profits per team, we have one team here, Flex, with $60 million in net profits, which is incredible. Number two, coming in Team YSL at $57 million in profits, and the Black at $56 million in profits. So all the teams in this class have made profits the first round, which is good. And that's what you want to do. You want to increase your net profits. As far as points go, we have a number one points BYLV at 1,038. Number two in points Team YSL at 1,022. And Flex coming in third at 986. So we have three teams making a terrific amount of points. Now remember, round one is the easiest round to make points in. Future rounds become more difficult as you're competing against not only the other teams in the class, but against your last year's performance. So if we see stock price, we see here that Team YSL has number one stock price of $17 a share, followed by Flex and then BYLV. And then the rest of the class is between $13 and $14.47 in stock price. So what makes stock price go up? Well, of course, profits make stock price go up. Sales, let's see, number one sales, Team YSL. And then we have coming in second and third pretty close to each other is New Guys and Yellow Y. So sales are great, but if I have a choice between two companies, one company has $5 billion in sales, one company has $1 billion in sales. First question asks, what are the profits? The $5 billion in sales company has $3 billion in losses. The $1 billion company in sales has $600 million of profits. So obviously, I'd rather have the $1 billion in revenues or sales company. Even though it's lower sales volume, the profits are higher. So that's why sales isn't the winning category, but it's important. You need sales to make profits. Earnings per share, again, we have the same three teams in the top area of earnings per share, and that's just your net profits divided by outstanding shares. So if you issue too many outstanding shares, it does make this number go down. So you want to, at a certain point, start buying back stock and improving profits. And we look at, if you look at the overall, this is the total market sales share. Most teams, our number one team in market share, I would say, would be Team YSL with 8,444 vehicles. So they did very well with their sales. And then towards the bottom, we have 7,609. So really, there's only a difference of about 900 cars. But that makes a big difference in overall. 900 cars means a lot of money, dollars in sales and profits. So if we go back to the leaderboard here, we see that the current round points, everybody did very well. If you make over 500 points, you did well. If you make 500 points a round for 6 rounds, that's 3,000 points. We're just looking for 2,500 points to get the full score for this simulation. So every team did very well. And we had some teams, two teams at the 96% level, meaning they beat 96% of the past 5,000 teams that have used the simulation this year. So very strong performance. We have 7 teams in the top 80th percentile rank, which is amazing. If we look at gross profits, now only one team didn't improve the gross profits because you start out at 40% when you take over this company. And if you're still at 40%, you've made no improvements there. So it's hard to get points if you don't improve your profit margins. So improving gross profit margins help. Operation profit margins go up, help. Net profit margin goes up. All your per share variables linked to profitability go up. So you see here we have a steadily increasing range where most companies are between 48 and 50, but we have two companies going above 50%, which is great. Stock price I talked about already. Return on equity is all, this looks at, again, profitability is a big piece here, and it's profitability compared to the equity in the company. So total points we talked about. Operating profits, what you can affect here is how efficient your marketing budget is. If your marketing budget is too much money in your marketing, you may have a hard time keeping up your operating profits. Earnings per share, we talked about. Return on assets, look at the assets you're buying and the amount of profits they're generating. So being conservative on the assets you buy and then increasing profits will help this number. Net profit margin, you can't really affect much here except for interest rates. So if you start paying down your debt, that could help your net profit margins increase. And revenues, total asset turnover looks at how you turn your assets into sales. So selling more products with your assets or goods. So it's sort of like having a factory producing more cars. If you buy a factory to produce 900 cars, that's going to be a good for your TAT, total asset turnover. But if you buy a factory and only make 50 cars with that factory, that's a very expensive piece of equipment, and you only made 50 cars with it, it's going to affect this total asset turnover. Okay, so moving forward into the next round, what we have here is, let me reset this practice game. So once you finish your practice game, you can go in and reset it. I have all your scores. They get locked in, so don't worry. And I'll be putting your grades up for the practice game soon, in a day or so. So everybody's completed round 1, so which is good. And teams, by and large, I think after completing those practice rounds, knew what they're doing in the team competition, because most teams did very well. So I'm just going to throw some data in here really quick, because I want to be able to give you some advice on how to review your performance. I'm going to pause this while I enter the data. So this is my practice game. I just want to go over what you can do moving from round 1 into round 2. First thing you should do is review your overview points, specifically your profit margins. Were you able to increase your profit margins at the gross, operational, and net levels? Then look at your return, your total asset turnover. If you have a negative amount here, that's quite common in the beginning as you're building out your assets. The assets are growing faster than sales, you may have this similar issue. Now, return on investment has to do with equity as well as return on equity, and these both are dependent on profits. So you want to use the cash given to you by your investors to generate profits. Earnings per share, of course. Now you see here that I increased earnings per share by 240%, but there's a max of only 100 points earned per category. So my total points earned were 820. And I did very well in most areas, including return on assets, market capitalization. My forecasts were not perfect, but more accurate. And I did have a deficit, though. The reason I had a deficit was I had unexpected inventory. So I had cars I forecasted to sell, I was not able to sell, so my surplus turned to a deficit. And you can see that in the production page. So on the production page, if you have current inventory, these are cars that you built and forecasted to sell, and they turned out not to be sold. So they do a couple of things. One, since they're not sold, they don't translate into profits. And since they're not sold, they go into the inventory, which inflate your assets, which make total asset turnover, which can make the total asset turnover and the return on assets negative or smaller than it could have been, because you have these inventories bloating up your assets. And if I go to the finance page, I can see if I'm looking at inventory for last year, I'm currently in this year, so last year's inventory would be, I have $13 million of extra inventory on this based on these unsold cars that are making some of my reducing some of my overview points. Now, what you should do as a team is go into the assessment page, check over any assessments that you didn't do well in, and there'll be custom advice on how to improve it, as well as 3 types of scores: stars, 1 through 5 stars, the actual score, and performance statistics such as average, above average, excellent. So that should be reviewed. Charts should be reviewed, including your individual performance chart. And this is a very critical chart because at the bottom, you get to see where your market potential is compared to your sales. So here I maxed out all my market potential because I over-forecasted and overbuilt vehicles. So that tells me I should keep a closer eye on that. And you can look at your sales, marketing, industry charts here. And then you have all your data for your industry information backed up, plus your competitors. So you can look at your competitors and say, what did they do differently? How did they earn points? What were their scores? What were their overview as far as their key statistics? And it's a good research area to get ideas about what your competition is doing. Your financials are backed up here. And then you start over in sales. So now hopefully you made some operational cost reductions, which will help keep your profits up. So you're going to redo your sales. Customer expectations have increased as far as what customers are expecting. So you have to redesign your cars to better meet your customers' expectations and hopefully to improve your profit margins. So if I'm doing this, I could say, let's see. I want to improve, so I'm going from 25 to 28, 70 to 75, 25 to 30, 10 to 15, 22 to 25. So I increased all of my, versus last year, all of my key statistics to better, hopefully, get closer to my customers' expectations. I'm going to increase the price, and I see that my profit margin is going from 48 to 50. I'm happy with that. My sales forecast, I forecasted 2,000. I sold 1,928. I know that this car increases by about 35%, which the student manual will tell exactly what it's increasing. So I'm going to increase my forecast based on the growth of this vehicle. So as you go through each of the pages, marketing, now I realize right now that this is not sticking as far as when you set the income target and age target. This does not affect, this is just part of the role playing or the reflective observations, doesn't affect your actual demands. So you're going to rethink your advertising, work on your production, including your operational investments, and then finally you're going to complete your finance, and then your pro forma financial statements will be generated once all your inputs are in, and you can see how are you improving from last year to this year. Are your sales up? Are your profits going to be up? So you can look over, review all these statistics. So that would just be some quick advice that I would say if you want to improve your score year over year. Okay, so that's my quick overview of round 1 competition. I wish you the best of luck on round 2, and I will do another recap after round 2. Thank you, and good day.